Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, I'll try to keep the video short because there are very few things to discuss. First of all, DXY. So DXY at last broke the support of 103.50. Right now, DXY trading at 103.25, and yesterday it made a low of 102.95. And as already we have discussed, that there is no immediate support on the chart of DXY. And if we look at the overall picture, then there are no fundamental news that will push the direction of DXY. So there may be a continuation of this downside in the coming days. You can see here dollar languishes as Fed rate hike fears recede. China reopening boosts optimism. The US dollar languished near a 7-month low against other major currencies on Tuesday as investors took heart that the Federal Reserve may be nearing the end of its rate hike cycle and as China's reopening drove demand for riskier assets. So there's a good possibility that in the coming days, we may see DXY trading below 100 also. Okay, and this is gold prices is Powell's speech in focus. And if we move to the Forex Factory or any economy calendar, we can see that on 10 Jan, we have Fed Chair Powell speaks. So today we will see some volatility in the market again. So my dear friends, please be careful. Market is expecting that there will not be any aggressive interest rate hike from the Fed. Let's see what Powell says. Now let's move towards the chart. Let's discuss about DXY first. As DXY has broke the support yesterday, so there may be a temporary upside on the chart of DXY again. Okay, if DXY starts going up, then observe DXY around 103.50, 103.80 in this zone, because DXY may be going for a pullback and may reverse again. Because as I already said, and as we already know it, that there is no fundamental factor that will change the direction of the market. I am not sure what Powell will say, but overall, okay, there is no fundamental reason right now for a trend reversal for DXY. If Powell says something and DXY reverses, then that's a different chapter. But before the speech, we have none. So as a result, the position of DXY is not very strong right now. If DXY tries to go up also, then there may be some resistance around this level and DXY may go down again. Now let's have a look at the chart of gold. So gold is standing at 1873 and gold failed to cross the level of 1880 that we have discussed in our previous video. Why 1880? 1880 was a minor resistance on the daily chart, and if gold breaks 1880 level, as you can clearly see, we have no other important resistance. Then the next big resistance on the chart of gold will be around 1995 or 2000 level, and then 2080, 2070. Technically, though the level of 1880 does not have a big role to play, but psychologically, okay, this is a level where traders will be very interested, because if market breaks this level, there is no immediate resistance on the chart of gold. So as a result, if gold breaks 1880 level, observe the market first, because there may be some false breakout as well. If market breaks this level, wait for 4 to 5 hours. See, this is a bigger level, so you need to wait. The confirmation is extremely important, because overall the structure, we have been talking about a structure of gold chart for a couple of days. So if really gold goes for a breakout, then it will be breaking out the structure as well. Okay, the whole structure of the chart will also change. So as a result, wait for 4 to 5 hours and just see how gold is doing. If you see that gold is trading comfortably above 1880 for quite some time, then you can go for a buy position. But the higher possibility is that gold will be coming down for retracement, because if we look at the RSI also, okay, usually I do not talk about indicators much, but you can see that RSI is also indicating an divergence. But surprisingly, I was expecting the retracement yesterday, but it did not come down. I took a sell position here also, but I had to close my sell position around 1870 because market was not going down as per my expectations. Though it was a riskier sell, okay, though it was a riskier sell, but still I took the shot. But the problem is that market is not going down. Okay, so try to understand the market emotion here. Market is standing at resistance. Market is not going down. Resistance means place of sellers. Market is not going down. What does it mean? It means that buyers in the market do not want to surrender. Buyers in the market do not want to go down. So that's why I spoke about the possibility of a breakout as well, because the market sentiment is saying that market is bullish, market wants to go higher. Okay, but yes, as a retail trader, we need to consider all the possibilities. So we need to also consider the possibility of a retracement as well. So if market comes down to the 15, okay, so if we move to the 15 minutes time frame, we can see the market is trading in a downward channel right now. Do not trade on this channel. Trading on this 15 minutes channel can be very, very risky. What I want to show you is that, okay, market is going for retracement, but it is very slow. So as a result, keep your eyes on the levels of 1865, 1864. Previous resistance to act as support. If it works, if you see market bouncing from 1865 level, you can go for a buy. In case market breaks 1865 level, do not go for a sell position, because overall the trend of the market is towards the upside. If you take a sell position in an upturn market, especially in a condition where market does not want to go down, you may be trapped. See, market is full of traps, bear traps, bull traps, and you need to understand that. So if market breaks also the level of 1865, try to avoid taking sell position and wait for the market to come down to the support of 1850 that we have discussed. Okay, the levels are still the same. And in case a big drop comes, okay, in case a big drop comes, try to draw a trend line like this and wait for the market to test the level of 1825-24 level. This is the best support on the chart of gold right now. Sorry, I didn't want to make the video longer, but sadly it went on for more than 8 minutes. So please follow proper risk management. Do not gamble with your hard-earned money. Bye bye. Take care. My risk can be wrong as well. Do not compromise with the risk management. Okay. Bye bye.